SB 22 has two main sections, one of them dealing with corporate income tax and one of them dealing with personal income tax. The corporate income tax side looks at 5 different sections: repatriation, GILTI, interest expense deduction limitations, FDIC premiums, and capital contributions. Now, the repatriation and GILTI sections have to do with income that is either sheltered or earned overseas. By definition, it really applies only to companies that have extensive multinational operations. The interest expense deduction limitation applies only to companies that have more than $25 million of business annually, averaged out. The FDIC premium section would only apply to banks that have more than $10 billion in assets. And the capital contribution section would apply to taxing economic incentives. And according to the fiscal note on the bill, that's a very minimal part. The point, however, is that between these 5 sections, largely actually the GILTI income section and the interest expense deduction limitation section, we're looking at a very costly bill. In the first year alone of SB 22, the corporate sections alone are projected to cost $137 million of a $187 million fiscal note, leaving only $50 million for that personal income tax section. And it's entirely possible that as businesses examine the tax code more and look for various loopholes and ways to exclude their income, that the actual cost could be far higher than whatever the projection is right now.